Okay, good afternoon, traders. Right, today is Tuesday, and I thought to record a short video to show you how to enter the trades. Now, for the past few months, I've been sharing the trade alert, right, with very specific entry price level, and I never believe in giving specific price level, but some students request, so I have made that happen. But over the last few months, I realized that. Um, Even though I give you the price point to enter, but most of the time, the trade we entered, it didn't happen at the price level which I sent now, right? It happened within the zone, but it doesn't happen at a specific price point. So I think that it is very misleading to give you a price level to enter. Instead, moving forward, I thought I want to give you the zone example now. Example, I for this particular pound yen trade that we took right in the trading room. Now, price pullback into this daily demand, right? Daily in an uptrend. So we are going long. We are looking for long when the price dip into this daily demand, which is the higher time frame demand, right? So as the price enter into this level, what we do is we go down to lower time frame, example 1 hour time frame, and we wait. We wait for the patterns to appear. Now, what pattern are we can expect? We can either expect the white curve accumulations for buying or distribution for selling. Or alternatively, we can look for the 1, 2, 3 reversal pattern or confirmation entry. Like the same as 1, 2, 3 is the same as what you learned in a workshop, right? It's just a different name. So now we go down to lower time frame. Now, of course, this is a replay. So I just want to show you how to enter the trade, right? So as the price, now you can see now price dip into the level already. Now, if you follow my trade alert, I say, okay, well, let's go in and buy at 149, 149, 40 area. But but the thing is, we already below 1440, right? But we still do not see the pattern yet. That is the reason why I say that giving a very specific price point, it doesn't make sense, right? It is better for me to give you a zone. All right. Once the price enter in the zone, you just go down to a lower time frame and look for the setup. All right. If you don't see setup, don't take the trade. Only when you see the setup. All right. So as we go down to a lower time frame and we see how the price react, right? How the price interact with the demand. Now, until today, until now, do you see any pattern yet? This area, do you see any pattern for us go long yet? Nothing, right? So there is no trade yet. There's no trade yet, right? So I think this is more realistic, right? We know that we're going to buy here, but so long as I don't see any setup, I will not enter, right? So I wait, right? Okay, so this is the now finally I see a price pullback, but now I don't see this significant pullback. I need a significant pullback. Remember our confirmation entry? Our confirmation entry, we say that as the price coming down, we need to see the price make a new high, and this swing is going to be a change of market behavior. And in the future, when the price come back down, right, and we are looking for buy here, of course there's a trend line. So this is confirmation entry, right? That's what you learn in the workshop. Okay, so now we are still waiting for that to happen, right? So now we don't see that yet. I see the price already make a significant swing high, right? Let me grab more. So now you can see if I go down to 50 minutes time frame, you see more clearly, right? Now this is what I mean by change of behavior. You can see that for this particular swing of buying, right, it is longer than all the previous buying. These are all the upswing, right? It is the longest. This is the one, right? So this is what we call change of behavior. Now we need to have change of behavior before we start looking for entry. All right. So this is what I mean by change of behavior, change of market behavior. Okay. From a down move, now there's a shift in the sentiment to the to move up, and that's the time. After we see this, we start to look for opportunity to go long, right? So where to go long? Of course, we see this is whole ERC up there, and we draw the demand. Say, okay, well, this will be the area that I'm interested to go long, right? If the price come back to this area, I'm interested to go long, right? So you draw a zone again, okay? So now we can stay at 50 minutes time frame. It doesn't matter, or if you want the 10 minutes, also can. All right. So yeah, up to you. So let's stay on the 50 minutes time frame. So now I'm interested to look for a pattern happen within this zone, demand within this demand. All right. So let's see what happened. Okay, we don't see anything yet. We see nothing yet. Nothing interesting there. Nothing. We don't see the pattern that we are familiar to go long yet. Okay, so now what we have is, now also realize one thing. Now we are in this daily. This is daily demand. All right, the big pink zone, and this is H1 demand. Okay, so now we are demand within demand. Demand within demand. Okay, so now we over here. Now if you go down to even lower time frame, you will see something happen. Can you see now? You see another white curve accumulations, right? This is the selling climax. This is the PS. This is the preliminary support area. Now, as I mentioned before, if you are not familiar with the white curve distribution attribution, what you can do is wait for price to trade above this level before you start looking for long, right? If you do not want to look for entry here, you can always wait for price to trade above, or another area wait for price to trade above this swing. Okay, these are two areas that you want to see the price trade above before you want to see start going long. If you do not want to trade this accumulation area. So now you can see that we have a very nice accumulation happening right now. This is the selling climax. This is the spring. This could be another spring, and test bar is here. Now, if we see another test bar, we can already enter, right? So this is a 3 minutes time frame. So let's go to 5 minutes time frame. This is even clearer, right? You can see right now, this is the selling climax, okay? And this is the spring, and this is a how you call that, shakeout. So price, can you see that in a 5 minutes time frame, we also see accumulation. So now what we can see right here is price is trading above this line right now, right? So you can always look for long here if you like to, right? Wait for another similar test bar before you enter, right? Let's pick another bar and see. Okay, we don't see yet. Okay, looks like we're gonna have a test bar. Let's see what happens to the next bar. Okay, now you can enter here, right? Price dip below, price pull back. There is a test bar. You can put a buy order here, long. After this bar, you can actually enter here. Okay, and your stop loss can be below the shakeout candle, and your target all the way up to at least this area. So now, if you don't trade on this smaller time frame, you say, well, I can't manage in such a 5 minutes time frame. Right? That is too short a time frame for me to enter, right? And you do not want to trade such a lower time frame. What you can do is go to the slightly higher time frame, say 50 minutes time frame. All right. So in this 50 minutes time frame, what do we see? Right, we see the price dip lower. Now you can again I want to put bring your attention to this. We are right now, the price is right now trading over here. This area, okay. Let's remove this one first. Okay, this area is the 15 minutes trading activities. As inside this whole activities, this whole thing, ERC thing, whole thing, right? So 15 minutes demand within the H1 demand, within this one is a daily demand, right? So you can know that we are demand within demand within demand, right? So it's a very, very strong area. So right now is if I see some signal, I like to go long already, right? So this is a 15 minutes time frame. Let's see. All right, so you can see the price start to trade above. Okay, now if you do not enter here, once you see the price start to trade above, you might want to consider enter already, okay? Because this is the ERC jumping across creep, right? So now let's, once you jump across creep, we go down to lower time frame and see, is there anything, right? We want to see, is there any pullback so that we can enter, okay? Oh, we don't see anything there, okay? So never mind, we go up to 50 minutes time frame. Go up to 50 minutes time frame. So we miss the trade here. We miss the trade here and market start to go off. Why I say we miss the trade there? Because we don't see the test bar or what we need to see, right? So we miss the trade over here, but it's okay. It's okay. We still have one area not yet going. Remember, we still have this area. This is the area that we want to enter. If the price can trade above here, okay. Once the trade, if the price can trade above here, that is our another potential entry. Okay, and then let's see. Price make another higher high, ERC. Now, if you are interested, if you see this while in 50 minutes time frame, right, you can always look for a buy when the price pull back. I'm not sure whether the price pull back or not. Let's say the price pull back to, we can buy this demand. Okay, correct. Now, the moment we see this ERC, price make a higher high, right? There's a new demand here created. If you go down to the 10 minutes time frame and see what happened, well, you see that, yeah? So what we can do is 5 minutes time frame, 3 minutes time frame, right? So we stick at 50 minutes time frame. So once we see the price break above this high and make a high, as the price pull back, we can put an entry at this high, right? So our order should trigger if you enter here. Now, if you enter there, now where is your stop loss? Let's say if you put the buy order there at this high, right? Now your stop loss can below here. You don't want to put your stop loss too near. Sometimes you might just spike, come down and back, snap back, right? So where is going to be your target? Okay, your target will be further up. Okay, here. Okay, so that is the potential trade if you enter on this, right? So now let's go down to 50 minutes time frame. So I'm showing you a different entry, different area that you can enter. So sometimes you say I miss a trade, somebody else already enter long and you miss a trade. We don't see opportunity here, it doesn't matter. We see opportunity here. This is our opportunity we saw. I just show you, right? So you enter here. Now, if you did not enter here, doesn't matter. We still wait for price. We need to see the price trade above this horizontal. Because why? Because if the price did not trade above this high, my price will likely to come back down to retest again, right? So we need to see. So if we see the price trade above this horizontal line, and then when the price pull back, that give us another opportunity to go long. If you did not already go long here, okay, and let's see. Okay, price pulling back. Okay, see what I mean right here, right? If you put your stop loss below here, you can stop out. That's why our stop loss is here. Just like I say, right? Our stop loss is below here. Okay, and let's see. Okay, now we going back up. Come on, push up. Yes, up. Okay, ERC again. Look at this. Can you see now? Right? ERC jump again. So we have one opportunity here. Now looks like we're going to have second opportunity here. If you miss this opportunity, now what you're going to do is you're going to wait for price to pull back to this area, give you a trade, and then go long, right? So that's what you see. So let's move on. Okay, coming back again, right? So now what are you waiting for? You're waiting for a test bar, test, like that's something that pin bar like that. Okay, no. Yes, something like that, right? A test bar. If you combine these two candlesticks, right, it looks like a test bar. Okay, a pin bar, basically like something like this. Combine these two together. That is the test bar, right? Once this green candle close, you enter. Your stop loss can below here. If you worry price might come down and stop you out, put here, right? Because now you have why because this is the low, so there are some stop loss to protect your and you put your stop loss here, right? We always use two level of low to protect our stop loss. Okay, and let's see what happens. Okay, price start to move up, right? So that is correct. That is the test bar. Now, even if you miss this, now it is okay for you to just enter in the market, right? It's not much of difference, isn't it? If you enter here, if you enter immediately on this after this green candle, the test bar, you enter here, you enter 149.52. But if you say after half an hour later, then you come to yours and you say, oh, the price already moved away. See, 149.57. 149.52 is only different by 5 pips. All right, what the heck, right? You just go in and buy in the market, put your stop loss below here. Okay, and let's see. I like to switch between, look at this, very nice pin bar, right? Sometimes I don't want to just speak on 15 minutes time frame. I like to switch between time frame, especially when the price is going to give me an entry, right? So if you go down to 5 minutes time frame, you see what now. See this is the one, right? You get in even earlier, right? If you go down in the 3 minutes time frame, you see something like that, right? So always don't just see one candle, but you must have the kind of how you call it, you must able to look at these few candle and merge them as one single candle. How does it look? Imagine if you merge this red candle and this all this into one single candle, what does it look like? It looks something like this. The market closed here on top. So it was a very bullish one, right? If you merge all this together, right? But of course, this is a 3 minutes time frame, right? So now we go back to, let's say, 50 minutes time frame again. Okay, and let's see what happened. Come back to test. Okay. See, market move away. So by now you should be able to adjust your stop loss to break even. Okay. Now we go to the 1 hour time frame because we are managing our trade right now. Remember, we are looking for this is the pound. This is the pound yen. All right. Remember, we short it from here, right? Yesterday afternoon, right? We short it from here. Afternoon, this around that area, we short it from there, here. Okay. So you see this swing down from this high all the way down to here. Okay. So let's remove this swing. So now we enter here. We enter long here. One, another one here, right? These are two areas you can go long. So we enter. Now, where to take our profit? Now, we can take profit here. Now, of course, we like to see the price go up here and we take profit there, but we have to be realistic, right? Now, the odds of price coming here possible, but how do you call that? It has less probability if we say we look for here, this area, take profit, right? So what we can do is just take 50% of this swing. That's a 50%, okay? 50%, and we can take about another 50% of this, another 50%, which is around this area. Okay, so the area we are targeting for take profit could be around here. Okay, and if you're say, well, I only want 50%. Well, once the price, once the price come and test this high, which is above 50%, you can consider take your profit off already, right? But if you want to squeeze the market out more, you might want to look for maybe 50% or 50%, which is around this area, right? So, and let's see what happened. See, you hit the target, right? Hit the target, you should be out already, right? Because why I say that? Because the further away the price move up, right? Right now, in terms of locations, you are not in a ideal location to buy anymore. Right now, once the price trade above 50%, now we are attracting seller to come into the market. When the price is right around this area, the kind of trader that we tend to attract are the buyer, okay, are the buyer. And once the price trade above this area, the type of trader we tend to attract is no longer buyer, it's likely to be a seller. So that's the reason why you want to start taking your profit the moment it hit around 50% and above, there's a swing high, start taking a profit. But if you really want to go for the fences, right, you might want to look for the next swing high, which is the 50% or the 50%, which is 75% of this whole entire swing, all right? And let's see whether the price go there or not. Yeah, you went there as well, right? It go to 75%. So now imagine we enter out. If we enter on the first if you enter on the first level that we enter here, which is here, and our stop loss is below here, right? If you hit a target here, the high, you have a 1 to 3 risk reward. If you get the target here, you got 1 to 5 risk reward. That's good enough, right? Now, on the other hand, if you did not enter the on the first entry, you enter after the break of this horizontal line, the resistance line, enter on the second arrow here. So now our entry is here, right? And your stop loss is here, okay? So even here, even you targeting this high, you still get about 1 to 2 risk reward. You target here, you get 1 to 2 almost to 3 risk reward. Okay, so that's how you look for look to enter. See, now the price pull back already, right? That's the reason why it is not say impossible that we just target TP here or even TP here. But the thing is, the further it goes away, now location wise, we are in the very, we are not, it's not in our advantage anymore for us for any long trade, especially when are coming near to the high, right? Because we tend to attract seller coming in. So the best is once you reach 50% to 75%, that is the area you should consider to take your profit off the table already. Okay, so that's how we enter the trade. All right, so I think that this will be a better idea. Instead of just giving you the fixed price level, I will give you a zone, right? Once the price, once you receive the zone where to enter the buy or sell, you have to wait. Once the price enter to the zone, the area that we are interested to look for a buy, to execute our trade, you go down to a lower time frame, right? Go down to a lower time frame, and you start to look for two types of reversal pattern. One of them is the white cloth accumulations for buying, distribution for selling. Or if you're not familiar with white cloth, right, you can always look for a reversal pattern, follow our confirmation entry. All right, that's it for the entry video. See you next time.